Hey everyone, welcome back to the channel. Today we're diving deep into Salesforce, ticker CRM, with a full breakdown of where this cloud giant stands right now and whether the recent pullback creates an opportunity for long-term investors. Salesforce has been on quite a ride lately, trading near its 52-week lows after a rough stretch that saw the stock drop over 36% in the past year. Yet behind the price action, the company is showing real momentum in its AI initiatives, particularly with Agentforce driving accelerating ARR growth and strong bookings momentum heading into the second half. At its core, Salesforce remains the leader in customer relationship management software, serving enterprises across every major industry with a suite that now spans Sales Cloud, Service Cloud, Marketing and Commerce Cloud, SWOT, plus the expanding Salesforce platform and integration and analytics segments. The company employs roughly 76,500 people and continues to innovate at the intersection of CRM and agentic AI, recently landing a high-profile partnership to power fan engagement at the FIFA World Cup 2026 and Women's World Cup 2027. Breaking down the revenue picture for fiscal 2026, total revenue reached $41.5 billion, with Americas contributing the lion's share at $27.2 billion, Europe adding $10 billion, and Asia-Pacific at $4.3 billion. On the product side, Service Cloud led with $9.8 billion, followed by Sales Cloud at $9 billion, the Platform and Other $8.9 billion, Integration and Analytics at $6.2 billion, and Marketing and Commerce Cloud at $5.4 billion. That diversification shows how the business has matured beyond its original sales automation roots. Earnings performance has been steadily improving. Fiscal 2026 delivered net income of $7.46 billion, or $7.85 per share, up from $6.2 billion and $6.44 the prior year. Operating income climbed to $8.9 billion, while EBITDA hit $13.2 billion. Margins are healthy, with gross profit margin near 77.6% and net profit margin at 18.7%, reflecting disciplined cost management alongside top-line growth. Management commentary from the latest earnings call highlighted record Q1 fiscal 2027 revenue of $11.13 billion and continued re-acceleration in growth, with Agentforce ARR surging 26% in the quarter after tripling the year before. Over half of new bookings are coming from existing customers, underscoring strong retention and the expanding wallet share within the installed base. The tone was optimistic on the AI opportunity, even amid broader macro caution. Looking at the balance sheet, total assets stand at $112.3 billion, with cash and equivalents at $7.3 billion. Total liabilities are $53.2 billion against $59.1 billion in equity. Free cash flow remains robust at $14.4 billion for the year, supporting both dividends and share repurchases, while keeping the debt-to-equity ratio at a manageable 1.22. The current ratio, near 0.79, reflects the typical working capital profile of a high-growth software business. On valuation, the stock trades at roughly 20.1 times trailing earnings and 3.55 times sales. Forward PE estimates trend lower into the mid-teens over the next several years as earnings growth compounds. Enterprise value sits around $185 billion, and with free cash flow yield near 9.6%, the market is essentially pricing in modest long-term growth despite the AI tailwinds that are already showing up in the numbers. Strengths include a dominant market position, rapidly expanding Agentforce ARR, and consistent free cash flow generation. Weaknesses center on still elevated valuation relative to some peers and ongoing restructuring costs from workforce optimization. Opportunities lie in deeper AI penetration and international expansion, while threats include intensifying competition in the AI CRM space and potential macro-driven delays in enterprise software spending. Recent price action shows a stock that has broken below key moving averages, with 1 week performance down nearly 10%, 1 month off 6%, and the 1-year return at negative 36%. Yet volume has picked up on recent bounces, and the chart is forming a potential base near current levels that could support a catch-up rally if bookings momentum continues. For intrinsic value, several DCF scenarios point to a range that brackets the current price. One pre-generated model, using standard 10% discount rate and 3% terminal growth, delivers approximately $142 per share, while more optimistic manual projections with higher free cash flow assumptions reach into the 500-plus range. The wide spread highlights how sensitive the valuation is to growth assumptions around Agentforce. At the current price near $182, the stock appears reasonably valued for patient investors who believe AI-driven product cycles will sustain mid-teens revenue growth. If Agentforce scales faster than modeled, upside to 250-plus becomes realistic. Conversely, any slowdown in enterprise adoption could pressure the multiple further. Overall, Salesforce looks like a high-quality compounder that's temporarily out of favor. The combination of accelerating AI bookings, strong cash generation, and a still reasonable valuation after the sell-off makes this an interesting name for long-term portfolios. As always, do your own research and consider your risk tolerance. Thanks for watching, and I'll catch you in the next one.
MarketSnap brings everything long-term investors use daily into one clean, fast platform. Explore stock financials, SWOT analysis, valuation ratios, 5-year analyst estimates, and our intrinsic value calculator, built with real fundamentals, not hype. All in a layout that's simple to read and ridiculously fast to navigate. And when you want to talk investing, join Nexus, our community where investors share valuations, posts, and stock discussions, all connected directly to the data. Use our stock's intrinsic value calculator to run and save real valuations with no spreadsheets. Share your analysis and valuations with others in the Nexus community. Get daily market summaries in video, audio, and article formats. Track the market with our earnings, dividend, and economics calendar. Our homepage gives you a real-time market overview with interactive heat maps, top market movers, and major index performance at a glance. Track daily performances, discover the most active stocks, and analyze performance across different timeframes, from weekly to yearly trends, and see which industries are leading or lagging. It's free to create an account, with optional access to premium forward-looking data. Try it now at MarketSnap.com and invest with clarity, not noise. That's a wrap for today's stock market summary from MarketSnap. Thanks for tuning in, and make sure to stick with us for daily updates and deep dive SWOT analyses to keep your investment strategy sharp. Whether you're navigating short-term turbulence or building wealth for the long haul, we've got the insights to help. See you tomorrow.